Hi everyone. Today's Friday, May the 2nd. For those of you that celebrated May Day yesterday, I hope you had a restful day. We are looking at some interesting news ahead. We've got the employment report, but let's get into it. This is the Moneyball morning report for the Benzinga Pro platform. My name is Anne-Marie Band, and as always, we have charts by the very amazing TrendSpider, who has all kinds of new things every time I go in there to look. So excited about that. So what are we looking at? Let's begin with the E-mini S&P 500. We've had 5 days of intraday megaphones. Now, I can't remember a time that I've seen those where they were also rangy, but intraday megaphones. That's a unique pattern for me. My mind can't recollect any others. But coming into the 8:30 Eastern time, we do have the employment numbers. We expect them to be a wee soft, and we've got Jerome Powell next week speaking for Fed potential interest rate reduction. I think he's going to be slow on the foot there. But that's neither here nor there. We can't do anything about that. All we can look at is price. So, a couple of interesting things happened in the ES yesterday. We had a high spike and then a move that was fairly sharp, but still held a higher low. So, what are we staring down? An upward 50. Mean reversion into the 50. That's where we opened the day in the Globex. We have a flat to upward 14 moving average, and we've got momentum that is fairly nondescript. It could be that we are simply going to fade right down into a sideways event. Notice for, let's see, yesterday morning, our opening candlestick low was 56.14. That's the number we sort of savagely moved into. It was also an IV move that was pretty important, and then we came right into that 5600 thereabouts midday or late evening last evening when the market opened, and now we've got ourselves a little bit of a range, right? And so this thing says market structure break. It tells us when we're sitting in an edge and then it breaks out. Your thought should be, okay, if it breaks up, pullbacks are buy zones because my trend is up. But if it continues a market structure break, you know, it's very likely to come into the moving average. And so this is what we're looking at right now. Where are the targets? Upside, 56.77. We came just shy of that and moved down. Yesterday's IV move took us into 56.71. We blew past it and then collapsed. Very important to understand how these implied volatility moves react to price. Some of them will push forward and continue going. Some of them will reverse. The ones who mess around and push forward, you follow the trend. The ones who reverse, you follow the reversal into the other implied volatility move or that moving average. That's how you use these formations. So, that being said, we've got sideways motion. We're sitting in a range. The lower target could be that 56.14, which was the low of yesterday's opening range, but essentially the high of this morning's range. It feels a little bit bullish in terms of being able to test it, hold, and break to the north. If it could not have broken to the north, that would have been a bearish signal for us to move. What we are expecting in the next 30 minutes is tremendous volatility expansion because of the numbers formation. But again, you can use that opening range event. My thought would be in a news-based space, wait for it to come into these IV moves before you make your decision, right? And you can use prior IV moves, but you can also use the opening candlestick as some of your target action. And to me, that's been pure gold. Okay, so there you have it. Lower edges 55.54 to 55.94. That's pretty wide range with a stop in between at 5,583. That's what the E-mini S&P is telling us there. Let's go to the NQs. Again, 5 days, intraday megaphones, breaks out and then creates another intraday megaphone. I find this to be very interesting. What does it do for us? Essentially nothing, other than telling us, it is my suspicion that this is algorithmic. Trade to the bottom of the range and bounce, trade to the top of the range and fade. That feels very algorithmic. And so that's what we're going to stare down. All right, still trend up, some momentum, it's above zero, right? 14 moving average, 14 SMA, sideways, but still up in a general trend. What do we expect? Potential mean reversion. And so to me, that means if we get a savage move to the upside, we wait for it to fade and we take the short, or savage move to the downside, we wait for price action to hold. We know what that looks like. I talk about it every single day. When that holds, we take the long, and our first targets on the reversal of these wide motions are into the opening range and then back into a test of trend. Okay, so that's what we're seeing there. Upper edges for the NQ, 20,070, and then the 2-day implied volatility move is around 20,185. On the downside, the motion could be back into congestion. That number looks like 19,620 or thereabouts, all the way down into 19,510. The 2-day implied volatility move, which probably has something to do with earnings as well that might be coming out on Monday, is way down here at 19,391. Taking a look at the YM, this is the E-mini Dow futures. These guys only have 30-day options. Their 30-day options tracked really well into that first target. It's still about 100 points away from the last high. So upper edges for the YM look like 40,300 to 40, excuse me, that's incorrect, 41,400, and just below it, 41,300. This one is still not above its 50 moving average on the day, but it's making really pretty good strides and holding the 50 simple moving average on the hourly very nicely. Lower edges, so in this formation, trend up, grinding trend up on the tighter formation. Any deep dips going to be buy zones. So what do you want to look for? A deep dip that holds. Where is that number likely to be? 40,500 is the intraday motion to maybe 40,400. The implied volatility for the next 40 days or so puts us down at 40,000 to 39,861. So pretty wide range, but from an intraday perspective, we want to see the price action come in and hold 40,500 before we start making any moves long. You want to be careful there if the dip gets extreme. All right, let's look at micro Bitcoin. If I would remember the ticker. Taking a look at micro Bitcoin, it had a number of days with ranges, opening ranges in the same space. And now we're in a very familiar zone that had some congestion and a breakdown. That area is near 97,000. What are we doing? Lower highs, very big spike that immediately sold off. And now we're sitting at the low of that candlestick formation around 97,600 or so. This candlestick suggests to me that this chart is rotating to the downside. Now, if it can't lose 97,000, it's not going to rotate to the downside. But I do suspect it is trying to hold that 50 simple moving average. It broke hard off of this downward trend line. That was a clean breakout area, moving average up above the 50, above the 14, above the break of a trend line. That's a really nice buy, happened 2 days ago. Now, after this big break into 98,200 and the fade, there's some decision to be made. What does trend tell us? Trend tells us that dips are buy zones. So unless you get back up here into 98,200 and reject it, there's no place to sell this, right? It's just in the middle of the, unless you want to take on outsized risk. Now, what I've noticed is that the implied volatility in the charts have held their lines very well, except in Bitcoin, where they've really moved down, below them, or well above them. Okay? That's just not really, I think it's mispriced in there, which means that buying options might be a really nice thing. Momentum is down, but it really is just telling us that, to me, this chart is in mean reversion. Upward levels, again, 98,200 to 99,800 for a wide move to the upside. For the downside target events, we're looking at 96,200, sort of splitting the difference between here. And then right into the middle of this mess, which is 95,150. The 2-day implied volatility does really push it down into 94,610. Let's take a look at oil. Oil is trying to recover. I don't think it's going to, but it sure is trying. So one of the moving averages I actually want to add, I saw someone, no, it's not a simple. Let's not do that. It's an exponential. And people use this quite often, but I found it to be very interesting. So we're going to keep our eyes on this 63. I don't know if it's esoteric and I'll need to take it off, but here's what it's telling us at the end of the day. What is the overarching trend? It is down. I just decided right there, I don't really want this. So I'll take it off later. Trend is down on the 50. Trend was up on the 14, but relative to downside pressure says that it's going into resistance. 60 is now the top of the range for this chart. So for folks that use the opening range trade, which is the first minute of trading, breakout, you take it long, break down, you take it short. My twist on that is it's got to be relative to trend. If it's sitting sideways, you might have a shot. But for trend formations, you really got to go in the direction of trend until it breaks trend. Okay, so what do we have here? This just triggered a short because it moved under the 20 and then it moved inside the opening range and then below the edge. The number here on the breakdown is $58.73. First target, $57.86. Second target, $57.49, and then right around $56, $56.20 is where the chart is moving. Now, it happens to double bottom. It's in great shape. Or if it comes into heavy congestion and hops off of this implied vol move at $57.86, we've got ourselves upside pressure back into $60. So upper edges, $60 to $61.19. I wouldn't hold my breath for that one today. Downward pressure. Let's see what the opening range. Let's duplicate this because we want that opening candlestick formation to tell us what's going on. Here's the high of yesterday's open. We're coming into that. That would always be a nice first target. And then the low of yesterday's Globex open print, 58.09. Really nice levels to look at. Implied volatility targets just below. But you could see them look at this. They're bouncing right off the line, right? I had somebody say, gosh, that's pretty arbitrary that you're using that. There's no volume there. There's what? I'm like, well, it might be arbitrary, but it works. So I'm going to stick with what works. Let's take a look at gold. Gold recovered pretty nicely. I have to tell you, I expected gold not to hold this 3250 area. I did not expect it. So what are we staring down? Implied volatility hasn't really compressed or expanded. It's about the same as it normally is, which is okay. Price action has been moving really nicely into it. We've got our first test of the high end of gold on the implied volatility move. That number is $3,276. It rejected that. Also happens to be prior support. And now, what would we like to see if we're long the idea of gold? Okay, if we stare this big pocket down, we can see, I don't know, people like to call that maybe a cup and handle kind of thing. I don't know. I don't really know how to use those sorts of things. But what I can tell you is this. We had a fade down, round and about into 3,200. We did not get it. And interestingly, let me clone this because this number at 32.98, 32.98 is the 2-day expected move from the implied volatility chains. So this is today's. It's already moved the entire day's motion already. So my suspicion is that price action will move back down into the base of the opening range, which is $3,240. That's going to make a buy zone. If it can't hold that area, we've got 32.20 and then back to 32.04. I suspect that this chart is really going to give back about, $200 more. But neither here nor there. We'll see what happens. Right now, it's moving sideways and it's trying to hold this floor at 32.41. Does that mean you could take a short right here? Well, look at where momentum is. That's pretty significant. That's pretty high momentum. It does not mean overbought. It means that people are continuing to buy. Okay? So if you want to do that, it's reflexive, tight, quick strike scalp sort of thing. Realize that they blow through the implied volatility move and then reject it. So you really want to watch how it behaves over time here. And if you get in right now, the risk is higher, right? I certainly would wait after the jobs number. And at the rate I'm going, this is going to be out after the jobs number. So we'll see how the IV moves have worked, which I love. I think that's very exciting. Okay, taking a look at SPY, really performing. Really, what did it do yesterday? Mean reversion. There's the 50. Slope of the 50, fairly solid. If it breaks below the 50, wait until it gets above the 50 and then take it long. Don't be a hero. And if you wait for it to get above the 50 to go long, let's say the chart ended up doing this after the fact, or you had this as a stop somehow, that's not what you want to do. You want to look for those opening ranges that collide in the area that tell you where price action is going to hold, and those are the ones you want to stare down. To me, that looks anywhere like 552 to 550. If it loses 550, you've got to get out of the way, right? But if it loses 550 and then begins to recover, you've got yourself a chance. Big reflexive move. Moving averages, moving very, very nicely here in the SPY. Upper edges, 561.60, currently looking like support. 554.75, 561.60 looking like resistance. 554 looking like support. You can see all the movement is dying down. Traders are waiting for the move into the employment numbers. And remember, a lot of people are short. Yesterday, they got put in the hurt locker because everybody was thinking, holy cow, this thing is going to, really break to the north. For certainly the futures market, this very, very big. Now here, as we start the new day, we're sitting inside of yesterday's range. There's nothing going on. We got to wait for it to break and expand and then pull back, give us a nice move. or break down and expand to give us a nice move. Boy, I hope that made sense. It feels like my words were all over the place. It feels like I was using a bit of word salad there, and I can't stand that. All right, here we are taking a look at the cues. Range, inside of yesterday's range. Trend, up to flat. Big move off the low. Here from $476. Pretty sizable move up off the high. And again, as I remind you, I think that's algorithmic motion. Implied volatility move to the upside, $488. And then some. Implied vol to the downside, $476. That's also where the 50 simple moving average is. Right now, what we are holding as near-term resistance is actually the high of yesterday morning's opening tick. That's 4 a.m., right? I use the first tick of the day to find the high or the low. Very, very interesting right there. No shadows above it, but megaphone. Very, very interesting. All right, so there we have it. Upper edges, 488. Lower edges, 472 to 473. Listen, mixed bag, pretty messy, cautiously bullish, but wait for your price. Don't chase. And remember, if you've been working on performance, you want to know exactly what you do when you do it. So write that down and flesh it out, or else, you're never going to be able to throw a splitter or, thread the ball into the end zone. I don't know what kind of sport you play. It's performance. All right. Take care, everyone. I'll see you soon.